Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. Kind of a mixed day in the livestock futures, mostly lower in the grains, except for Minneapolis spring wheat. And let's talk about the selling pressure that we saw in soybeans, Matt. A lot of it coming from the soybean oil market. And so, what was the story there today?
Yeah, I mean today, I mean that's the thing. It's a tough call, but crush numbers certainly aren't exactly going to be supportive. I mean, soil stocks are just huge, and bottom line is that you've got a risk off event going at the same time that you've got essentially quite a bit of excess soil stocks, and what's that going to do? You're going to get some selling pressure, spillover from soil. Same type of thing as whenever this market went up. I mean, you actually saw soy oil lead the bean market higher at times, which typically soybean meal is more of your leader there. This year, we've seen a lot of that occur. And on the way down, it certainly seems like some of that pressure from the soil market has spilled over into soybeans, and it's just made it the path of least resistance has certainly been lower due to that.
Yeah, the global veg oil market is really kind of collapsed as well here when you look at palm oil and some of the other oil seeds in addition. Okay, so how much technical damage did we do to the charts today in beans, or did we do any damage? Because we did hold $12 at least in November.
Yeah, I mean, we still held $12. The tough thing with either corn or beans, you've got several contracts that are essentially in positions where you're below a lot of your moving averages, if not all of them, for some of these
Yeah.
contracts. And so, I think if you can hold $12 beans for the time being, you would call that somewhat of a win. It's interesting to note that your 85% level, for beans is actually below $12. It's in the high level. I believe it's 11.87 or somewhere in there. But regardless, it's you still have that insurance level even farther down. Uh, I think 12 holds for now. Michelle, I'm afraid that whenever it's all said and done, by the time this fall rolls around, the price levels we're looking at today that we're complaining about today, quite frankly, because it's tough after what we've seen the last couple of years. I'm afraid some of these price levels we see today actually might look pretty good this fall, and that's if we raise a decent crop. It looks like we're going to get enough acres planted. In my opinion, I know the Upper Midwest still has some areas that are wet, but for the most part, this planting pace would suggest that we might be able to get plenty of acres planted. If we have a good crop with an El Nino coming on, I tell you, I'd be a little bit concerned of what price direction might look like.
All right. Planting pays, you mentioned that, the risk off in the outside markets and the lower corn market today was kind of a result of that too, wasn't it?
Oh yeah, I mean, there's no doubt. The planting pace. I mean, certainly, in my opinion, is going to be one of those factors that a trader takes a look and says, "Hey, we're way ahead of last year. We're ahead of the 5-year average. Uh, this crop is going to be planted in a little bit better fashion." Now, I mean, I don't want to discount what I just said, but we also have to remember a lot of this corn that was planted really early. It's been so cool in many parts of the corn belt this year that I actually didn't get that great of a start. I don't think there was a ton of replant by any means, but I don't think that we had near the pop out of the ground type start that we had last year. Even though last year was a little bit slower, whenever we did finally get in the field, it sure seemed like everything came out of the ground quickly, uniform, and gave us a really good shot at a pretty good crop. But this year's got a little bit different feel to it. But overall, what's the trader looking at? Planting pace is so strong that, again, I think the expectations are that you're going to plant a lot of corn acres, at least maybe plant that 92. Some people are even saying we're going to plant a few more because input costs have come down, particularly fertilizer prices.
Yeah. So with what you just said about the fundamentals and the fact that the funds are short in market, if we take that out, could this thing get pretty ugly? Will they keep pushing short, Matt, or not?
Yeah, I mean, typically they don't short the market at this time. The
Right.
funds, a lot of times, are building a long position. And so I think they've lost some interest. In fact, I do think that a lot of your money, if you will, has kind of gone to the sidelines. Yeah, the funds are short corn, but I feel like some of the things that maybe they would be buying, they're not necessarily stepping in and buying. I think you have a wary investor at this stage. A lot of this debt ceiling talk certainly is a concern to traders. Still, some people tossing around recessionary type talk. With that being the case, I just think that there's a wary investor out there.
No, I'm with you on that. What about the wheat market? Of course, we've had the big run up here on weather and war fears, but did we just consolidate today? Was it just profit taking because we hit resistance, or is that market waiting for some more news to keep pushing it?
Well, I think it's a combination of things you talked about. I think a little bit of consolidation. Whenever you look at the wheat tour, I've been following along. Of course, you see some of the Twitter pictures and whatnot, and a couple of the fields that they called 35, 40 bushel. Yeah, I hope they make that. But I mean, some of the fields that they've posted today, I guess, looked more like an abandonment type field to me. So, obviously, a lot of the growers that we work with out in that part of the world, they've just been through the ringer, and so. You've got to think in Kansas, you could see a decent amount of abandonment, even into Nebraska. I mean, there's definitely some areas that have gotten relief of late, but some of these areas, little too late. First of all, other areas, unfortunately, just continue to miss. So I think that the wheat situation is stable. And quite frankly, if wheat hadn't had the type of scenario unfold over the last few days as far as price action was concerned, you've got to think maybe things would have even been a little bit harder as far as especially corn's concerned.
If the Kansas Wheat Tour confirms this lower Kansas crop that we saw in the report last Friday, do you think it's buy the rumor, sell the fact, or do we keep going here?
That's a tough call, quite frankly. My personal opinion is that, yeah, USDA had a fair amount of abandonment and lower crop size there. But at the same time, I think you could look at even more. Just with the folks that we've talked about and talked to, I mean, this is a dire situation. Whenever you're going on a 3-year drought, there's a lot of areas that just flat out have not had enough moisture to make for anything as far as a crop's concerned. So, I think it's going to be the final number is going to be something people are going to watch for very closely. I certainly agree with that, but I think that weather moving forward is definitely going to be one of those things that the wheat market's looking towards forward direction. And of course, the outside markets are going to affect wheat somewhat. But bottom line is right now, this is a poor crop. The thing is, though, we know wheat's grown globally just about anywhere that you can walk. So you can fix a wheat situation very quickly as well.
What about the live cattle futures? We consolidated a bit here today. Was that the debt ceiling talk, the risk aversion there because of that, or more?
Yeah, I think it's a combination. But Michelle, I felt for the last couple weeks, there's been several days. This day kind of jumps out to me. Corn market down double digits, you would sure think that with the fundamentals in this cattle situation, that you would have had really strong gains. Now, feeders did okay,
Right.
but as far as fats were concerned, they're kind of hitting up on some levels where it just seems like people aren't wanting to buy them. With that being said, some of these cash cattle trades that you continue to hear about have been super impressive. Well over the board in some places, whereas we're as far as where we're topping these markets out. I'd like to see a little more convergence there, but at the same time, I guess what I'm getting at is that what really matters is what's going on out in the real world. I mean, obviously, the market, we're going to pay close attention to it, but there are some really salty prices still out there right now.
Yeah, and there's talk of maybe steady a little bit better cash this week in some total, so that will certainly be supportive. What about the back end of the feeder market? Still continues to make new contract highs. When does it become too pricey to even put these cattle in feedlots? And will we see evidence of that maybe in the cattle on feed on Friday?
Yeah, I mean, I think that you will. You're going to continue to see lower numbers. I firmly believe that. I mean, it's pretty tough to get around it. And with some of these pastures healing up, you've got to think that some of these late heifers and whatnot might get retained. And so that might make the feeder and fat situation even a little bit tighter as far as that's concerned. So, in all honesty, I mean, you've got the fundamentals to build quite the fire under this market, and we've already got high prices. What could really slow us down, of course, is going to be what if you have issues as far as the equities are concerned, consumer confidence is
Yeah.
concerned. Those are the only things, in my opinion, that could slow down what I see is a train that's building up some pretty good steam.
Yeah, and the tightest supplies are still ahead. All right. Thanks so much for joining us, Matt Bennett with agmarket.net, and that is Markets Now.